Welcome back to the Financial Independence Network channel. Today we'll be talking about the global banking decline. If you'd like to keep up to date with the global economy, make sure you hit the subscribe button on the top right. Now, so you don't miss any future videos. Have you heard the news? First Republic Bank needed rescue funding last week and it's causing quite a commotion. They've lost more than $70 billion in deposits and their stock has dropped by more than 80% this month. Yikes! The biggest U.S. banks have pledged $30 billion in new deposits to stabilize the lender, but some analysts say they still need to raise funds or sell off their assets. It's like the banking version of The Bachelor. Who will get the rose and save the day? And it's not just First Republic Bank that's causing a stir. U.S. policymakers are also nervously watching the rushed rescue of Credit Suisse, hoping that its purchase by Switzerland's biggest bank, UBS, will stem a slide in financial stocks triggered by the recent collapse of two regional banks. Regulators globally are worried that a collapse of Credit Suisse, a systemically important financial institution, could cause other large banks in several countries to also collapse. But don't worry, Treasury Secretary Janet Yellen and Fed Chair Jerome Powell are on it. They welcomed the deal while also trying to reassure U.S. investors, "Phew, crisis averted." Late Sunday, the Fed and five major central banks announced a coordinated effort to improve liquidity by moving U.S. dollars among themselves each day starting Monday, instead of once a week. The central banks then lend those dollars to financial institutions to backstop other countries' funding needs should strains emerge in global markets. So if you're wondering why your pockets feel a little lighter, blame the central banks. The market's reaction to all these developments could influence how the Federal Reserve approaches its rate-setting meeting this week. Will they raise interest rates by a quarter percentage point or not? It's a finely balanced decision, and central bank officials are warning that financial conditions are at greater risk of tightening abruptly because of the banking shock. It's like watching a game of Jenga. Will they pull the piece that topples the whole thing? Meanwhile, the Federal Reserve, the Federal Deposit Insurance Corporation, known as FDIC, and the Biden administration continue to study the question. Will they have to provide further assistance to the banking industry, in particular smaller lenders? It's like they're playing a game of who wants to be a billionaire. Except in this case, they're trying to prevent banks from going bankrupt. So folks, it's a wild world out there in the banking industry. Regulators are keeping a watchful eye on First Republic and Credit Suisse, and the central banks are doing their best to keep things stable. Let's hope for some private solutions to emerge and stabilize the system, so we can all go back to living our best financial lives. That concludes our video. If you enjoyed this information, please comment, like, and share. Also, make sure to subscribe and hit the notification bell so you don't miss our Friday series on the steps to achieving financial independence. Thanks for watching.